Hello, everyone. I'm going to share with you today 5 steps to trading for an income. 5 steps to trading for an income. And here are the main 5 steps. I'll mention them quickly, and then I'll go through them one by one in detail. First, you want to be able to set up a watch list. Second, you want to set up for day trading. I'll explain what I mean by that because we've been doing swing trading all this time. We are, but the setup will be for day trading. Okay. And then look for high probability entries. Number 3. Number 4, we're going to focus on your entry and target. Okay. You're going to focus on how to do the entry and the target. And then finally, you want to be able to track your progress. All right. So first, let's go to setting up the watch list. How do we set up your watch list? Well, find trending stocks using the 20, 60, and the 200 period moving averages. All right, so we have been using the 20, 60, and 200 period moving average all this time. But here's why we want to do it. We want to make sure that the 20 period moving average is above the 60 period moving average, and that the 60 period moving average is above the 200 period moving average. Okay, so the 20, 60, and the 200 should be in that order. Now, what we want to do is we want to find that order in 3 different types of charts: the daily chart, weekly chart, and the monthly chart. Okay, so we're going to look at some examples. What I have done is that in TradingView, I've set it up in the way that I can easily switch from my swing trading and my day trading stocks. So I mentioned to you here the daily, weekly, and monthly charts. So what I'm going to do is I'm going to select 3 different tabs in my browser. I'm going to show you the process of how I'm doing it. And I do this approximately once a week, usually maybe on a Saturday or something like that is where I do it. So here's, see the D up here, that shows that this is a daily chart. And what does that mean? Well, the daily chart, what I'm intending is, let me select the same stock on all 3. All right. So Mark Sands Pharma, and I don't know if I'm pronouncing these names correctly, but it may not matter so much. But here's what I'm doing right here. And the ones you're seeing on the top of this watch list are some of my best selections also. All right, so here's the daily chart. What does the daily chart mean? Well, we've got some videos on our channel that explain each of the candles, the candlestick patterns, and what they mean, and all those things are there. So you want to look for those videos. You will get the explanation of what that means. But simply, each of these candles represent 1 day of prices. Okay, each of these candles represent 1 day of prices. That's what the daily chart is all about. Then another tab, we're going to select the weekly chart. All right. And the weekly chart, each of the candles represent 1 week of trading. Okay. And I'm selecting the same stock on all 3, Mark Sands Pharma. And my internet is slowing down a little bit. 1 minute. Just give me a minute. I've got a phone call coming up. So the weekly chart means that each of the candles represent 1 week of prices. Here it is. So this green candle, last one here, that bottom of that candle was the beginning of the market open on Monday, and the top of that candle is the close on Friday. And the wicks that you see going up and down, these are the lowest and the highest points. Okay, so that's a weekly chart. And then we'll go to the monthly chart. All right, same things. Let me select. So here I'm selecting the monthly here, up here on top. Okay. So you'll notice that there will be a drop-down menu. And in that drop-down menu, you can select 1 day, 1 week, 1 month, like that. The selection is available. And I have simply pressed the star on these. So therefore, it appears on the top right here, DWM. So I selected one as the daily. I selected another tab for the weekly. And then I'm selecting the third tab for the monthly. Okay, and then I'm going to stretch it out. Here's what it looks like. Okay, so that means this last candle, all right, is the beginning of the month, and the top of the candle is the close of the month or the last day of this month. Okay, and then the previous candle is the last month, the previous month, the opening, and the closing. All right, so this is what we see here in the three types of charts. Okay, and of course, we go back to our notes, and what we're doing is make sure that the 20 period moving average is above the 60, and that the 60 is above the 200. Okay. Now, I also have a video explaining how to set up the moving averages, and you can watch those videos, how to do it on your laptop and how to do it on the phone. It's all there. You can do this on a laptop or on the phone. This kind of thing is a bit easier on a laptop, but even with the phone, you can do this. All right. So here's the daily chart. And what I'm doing is I'm looking for, here's the blue is my 20 period, and the red is the 60 period, and this orange or the yellow, whatever that is the 200 period moving average. So what I'm looking for is that the 20 above the 60 and the 60 above the 200. See that? This is the pattern I'm looking for. So I want this pattern on the daily, weekly, and monthly chart. So here's the daily, and here's the weekly. You notice that it's the same one on the weekly. See, the 20 on the top, 60 below that, and the 200 below that. Okay, then here's the monthly chart. The 20 on the top, 60 below that, and the 200 below that. Okay, so this is what we're doing. All right, now you'll find there are other stocks that doesn't fit with this pattern. So I'm going to some others that we can look at, and let me go to the one on the bottom of my list. Where is it? Let me see what is on the bottom of my list here. My internet is a bit slow today, so I believe the bottom is Titan. Is on the bottom, the Titan company. Here it is. Yeah. All right. So that's on the bottom of my list, and I want you to look at that. And well, all right. So this also looks in that pattern, the 20, 60, and the 200 below that. See that? Titan seems to be in that pattern. So I'm going to look at some stocks that are in that pattern, some that are not, so that you can see the evaluations and how I evaluate and look for trends. So Titan is a trending stock. Look at that. All right. It's trending right now. The 20 above the 60 and that 60 above the 200. So clearly it's trending. And if you look at historically, look at it. If you zoom out like that, you can see that happening for a long time. All the way back in 2020 onwards, it's been doing that pattern. And let's look at the daily chart on Titan. All right, let's go to the bottom of my list. Here it is, Titan. Okay, so in the monthly and the daily and the weekly and the daily, it looks like this pattern is being respected. Look at that. And it looks like it's a good stock. It's moving well. And here is the ATH, means the all-time high. I'm going to move that up further. Here it is, the 2060 200. So Titan is obviously a trending stock. So I'm going to move Titan further up my list so that I could include that. Let me see. Yeah, it should slide up there, and I'll include that on the top of my list. The only problem with Titan is that it's an expensive stock, 2,876 rupees. 2,000, yeah. So it's a bit on the expensive side. All right. Nevertheless, it is a trending stock. If you're trading with maybe, more than that, 10, 20, 30,000 rupees or lakhs, this still is a possibility for you. All right. So let me find some that are not. Let's see, Zomato is one. All right. That let's look at it on the daily chart, what it looks like. All right, you'll see Zomato, the 20 is above the 200 and the 60 is below the 200. That is not in the pattern that we want, although it looks like it's moving into that pattern. Okay, it looks like it's moving into that pattern, but it's not there. And that's not the pattern that we're looking for. Let me also mention to you that, in trading, as you're trading for income, trading for a living, and things like that, when you're dealing with this, you don't want to have any favorite stocks, favorite companies. And there's been several people that have told me this. Okay, even recently, this company, I really like this company, or I really like the stock. You don't want any favorites. Okay, that's the issue here. All right, if you look at Zomato, you'll notice that on the daily chart, okay, it's getting there. All right, but we don't know how long that will last. But on the weekly, look at that, the 20 is below the 60. Okay, now the monthly, there's not enough data. Okay, the Zomato is just too early, too recent. It was in July of 2021, so it's too recent to have that much history. Okay, all right. Let's look at a few others. Let's see. Yeah, I'm going to take BHEL for an example. I'm looking at for some negative examples so I can show you the good positive ones all as well, and the negatives. BHEL. BHEL, here it is. All right. So BHEL on the daily chart, look at the daily chart. The 20 is above the 60 and 60 is above the 200. Okay, that seems like the right pattern we're looking for. But if you notice, it's pretty much going sideways. If you zoom out like this, it's pretty much going sideways for some time. All right. So what we do is that we look for what's happening on the weekly and monthly charts. Well, on the weekly, it looks good. 20 above the 60 and the 60 above the 200. Let's look at what the monthly is doing. See the monthly? You have the 200 on the top. So long term, BHL has not been trending for months and months at a time. Okay. So do you want to take this or not? Well, I'm not taking it. Okay. I'm not taking it as a trade because I'm looking for ones that are trending for the long term as well. Okay. Why? Is it because I'm going to stay in it for a long time? No. But it's just that if it's been trending for long term, that the possibility and the investor's mindset also is very positive about it. And also, there might be some positive factors in the company as well. Although I'm not looking at all the details of the company, I'm sure there will be a lot of positives in the company as well. Okay, so here are some negative examples. Okay, now let's go to all the positive examples that I have on my list. All right, ITC is one company. The top 15 to 20 here are on my good list. Okay, so here's ITC. And let's look at the monthly chart of ITC. Look at this. ITC is close to its all-time high, but here's what you see. Look at that. The 20 is above the 60 and the 60 above the 200. And then on the weekly chart, the 20 above the 60, 60 above the 200. The daily chart, 20 above the 60, 60 above the 200. Okay. And if you look at the historical data, all right, and if you zoom out, you'll see that you'll see the movement. Look at that. You see the nice movement there. Okay, and then and on the weekly as well, I'm going to zoom out and you'll see. All right, so you'll see that there was kind of a sideways trend for some time, but then from where is this? From 2020 onwards, all right, there's been a gradual upward move. Look at that, and then around February of 2022, there's been a very strong movement up. And that's where, see this? That's where this pattern began to take place right there, the 2060 and the 200, right about that point. Okay. Now, even those who entered at that place, you'll find that there's quite a, like, let's say if from here you entered there till now, you're still looking at about an 80%, 90% increase all the way from July of 2022. All right. So that's ITC. And on the monthly as well, it's getting into that pattern. And so these are the kinds of stocks that I'm selecting. All right. Now, so here's how to set up a watch list. Find trending stocks using the 20, 60, and 200 period moving average. Number two, make sure the 20 moving average is above the 60 moving average and that the 60 moving average is above the 20 moving average. Okay, the moving averages should line up on the daily, weekly, and monthly charts. That's what we did, right? We did all three charts, and I used three different tabs to do that. Number two, you want to set up for day trading. Okay, use a shorter time frame like a 5-minute chart, 3-minute chart, or 2-minute chart. Some people use a 1-minute chart. It's just that's a bit too much. That's too sharp. But anyway, I prefer the 5-minute chart. Use the 20 MA and the 200 MA. All right. So what I'm doing is I have something set up already for a day trading, and I will open that one up here, and you'll see. Okay, let me let that open up. Okay, I'll go back to the notes. So make sure the stock is above the 20 moving average and that the 20 is above the 200. And look for stocks where the 20 and the 200 are close. All right, here we are. Okay, and here we are. So in this one, I'm only using the 20 moving average and the 200 period moving average. The 20 on mine is blue and the 200 is that orange color. All right, so what did we say? You want to use a shorter time frame, like a 5-minute chart. Here it is, look, 5 minutes. As I told you, there's a drop-down menu. You can select 1 minute, 2 minutes, 3 minutes, 5 minutes, like that you can select, okay? So I've selected the 5-minute chart. What does that mean? That means that each of these candles represent 5 minutes of trading, okay? And that's it, all right? That's what each of these candles represent. Now, this is an entry that I've made the other day, so I don't remember exactly where I entered. It could have been earlier, but that's the point of entry. That's a line of entry, but that's not the exact point of entry. But nevertheless, look here. What we have is we have the 20 and the 200. Okay, so what we want to look for is stocks where the 20 is above the 200. Okay, where the 20 is above the 200, and where the 20 and the 200 are close to each other. All right, so here you have the 20 and the 200, but then the 20 is below the 200. You don't want to enter there. All right, but you might say, well, you have an entry there. Well, I entered much earlier, and it's still in there. It's still there, not hit my target yet. Okay. And let me look at ITC and what ITC looks like. All right. ITC as well. The two moving averages, the 20 and the 200, are too far away. And the 20 is below. I would not be interested in that. All right. ICICI Bank. Look at that. The 20 is below the 200. Okay. And here's Nifty Bees. It's actually a mutual fund. Or it's like not a mutual fund. Yeah, it's like a mutual fund, but it's ETF based on the Nifty. Okay, but this one can be traded like a stock. All right. The Titan company, as I mentioned earlier, that I just moved it into my watch list. Here it is. So here's the 200 and the 20. The two problems are the 20 is below the 200. And that the distance a little bit. Okay, so I may not select this one yet. I'll just wait. So the key is to select only those stocks that will be in that pattern. Look at this. The 20 is too far above the 200, although the 20 is above the 200. All right, HDFC Bank. Let's see what this looks like. Okay, now here it looks like the 20 is above the 200 and the 20 and the 200 are close, but the stock has dropped below. But stocks, charts like this, I keep a watch on this. Okay, I move it up further and on my list, and I keep a watch on this because sometimes these will shift. Okay, sorry, there was too many disturbances, but I'm back again. All right, so I continue with these lists, and I'm going to look for stocks where the 20 and the 200 are close to each other. All right. Well, what I can do is I can look at something that is here's like this one here, Indian Bank. What I'll do is I'll look at the history and I'll show you the points of entry that would have been a good possibility. Here it is. So here's a place. All right, here's somewhere that I had entered previously. All right, here's a place where you have the 20 and the 200 close to each other. Quite often, when the 20 is rising above the 200, at that point, that's a great place to be. Okay, and also where the 20 is close to the 200. All right, and you'll notice that the 20 rises above the 200, but it doesn't keep rising too much further away from the 200. What often it does is it keeps coming back close to the 200. Okay, it rises above the 200 and then finally comes back, rises above, comes back. Okay, so look at the history. And this seems to happen again and again. The 20 goes away from the 200 and the 20 keeps coming close to the 200. Okay, and these would be good for those who are shorting the stock, but we are not doing that. And here the 20 rose above the 200 and came back down below. Okay, so this is what we're looking for. All right, and you'll see that you see the 20 and the 200 close to each other. And let me bring it to the end. All right, let me look at a few more examples. NTPC. All right, here's another example of, and notice that this is a 5-minute chart. Okay, all right, here we are. Okay, so look for entries where you are close to the 200. PFC. Again, 20 is just rising just above the 200, very close. Okay. All right. So use a shorter time frame, and I'm using the 5-minute chart. Use the 20 and the 200. Make sure the stock is above the 20, 20 above the 200. All right. But also look for stocks where the 20 is close to the 200. Now let's talk about entries. Okay, looking for a high probability entries. Does it mean that it's always going to be that clear? No, not necessarily, but these are high probabilities. Find bullish candlestick patterns. And we have videos on our channel regarding the candlestick patterns, and you can look that up. I'm looking for two different types of candlestick patterns, the hammer candles and the bullish engulfing candles, both of these. And you also want to look for a breakout from an area of resistance with a large candle. All right, so let's look for some of these patterns here. In this, as an example, all right, you see where the 20 rose above this 200. And I want you to notice something here. Look at this. There's been like an area of resistance right here. Once you got to this place, a price point of about 196, you notice that the stock tried to rise above that several times. 1, 2, 3, 4, 5, 6, 7 candles right there. It could not go above that. Okay, and even previous to that, look at that. Previous to this dip, there was resistance in that area. It would not allow it to go. But you have this large candle here that broke out of that. Okay, so the pattern is right there, and the large candle broke out. And then the second one, see, you have two of these large candles that is broken out. So this is a point where you would want to enter whenever there's several candles that faced resistance, maybe 5 or 6 or more candles that faced a particular resistance. See this resistance right here, this one, and let me draw a line so you can see that clearly. Here's a line. I'm going to take a horizontal line here and put it right above this candle. All right. Okay, you see that dashed line? So see the resistance right there? This area, again, resistance, it would not allow it to go up. And finally, this will also face resistance, but this candle here broke out. Look at that. This candle broke out, and you'll see there's a long wick on the bottom, okay, showing that the price went all the way down, but it didn't stay there. It closed above that. Okay, so that is a very positive, bullish indication for us. And so that's a place where I would enter. Okay, so that's a good point of entry where you're covering several candles of data. All right, let's look for other areas where there's a bullish move up. Okay, here's one right here. Here's a large red candle that's getting overshadowed by two large green candles. Okay, but look what happens after that. Okay, after that, there seems to be a follow-up, and it continues to move up even further. Okay, but it's taking a long time, but it is moving up further. So if you were to enter right there, you'll be able to, let's see what kind of a move is there from that point onwards. Not like that. Let me take it here. See that? 1.37%. Okay, and often what I'm doing is I'm looking for 1%. All right, so there's two types of candles that I've showed you here. One is where there's a formation where there is a set of resistance. Okay, there's like an area of resistance that's being broken out. That's one. And then another one is a bullish engulfing candle. All right. Another one is a hammer candle, no matter what color it is. Look at this. This is called a hammer candle. This is another hammer candle, okay, where the candle looks like a hammer, pretty much. And also, what does that mean? Well, that means that the lower prices are rejected, and it closed higher. Lower prices were rejected. So in these candles are often a good point of entry, showing that the probability is higher that the prices will continue in that direction. So three types of candles that you want to look for: hammer candles, bullish engulfing candles, and a breakout from an area of resistance. Okay, here's a hammer candle right there, hammer. Okay, and this is not a hammer because there's a huge wick on the top. Okay, you want it where there's either no wick or a very tiny wick, like this one here. It's a tiny wick. Okay, and that's also a bullish example. There it is. You have few candles that continue to go up after that. Okay, and then as I showed earlier, like this one, there's like previous area of resistance that's being broken out. Okay, so a breakout from a resistance is often a good sign as well. So there are three things I'm looking for right there. Three things. There are many more, but these are the three that I am looking for high probability entries. Now I'm going to talk about entry and target. Okay, so when you are making the trade, you want to select long-term or intraday. Let me explain what this means. Long-term is simply a cash trade. Cash and carry is what Zerodha uses. That means you're using your cash to buy, and that's it. Intraday is a leveraged trade. That means the brokers will lend you up to 4 or 5 times your capital. There are some brokers that will lend you even more. And then also you have to sell on the same day. Okay, you're required to do that. Now, so many minutes before the market closes, what they will do is they will do something called a square off. That means they will sell it off, whatever price it is at, if you don't sell it. Okay, that's for intraday. All right. So what I'm doing is I'm selecting the long term. Okay, I'm selecting the long term, the cash trade. That's what I'm selecting. I'm not taking the intraday. All right, because if I do that, then the problem is that at the end of the day, if it doesn't reach my target, then the broker will close the trade for me, and I might be at a loss. And also, the leverage means that when you make a profit, you can make 4 or 5 times the profit. Okay, 4 or 5 times what your cash availability is, which can be good. But if you lose, you can lose that much as well, that much more. And so the losses are even greater. And the other problem with the intraday trades is that the brokerage fees and taxes are much larger. Okay, maybe I don't know how much more, but it's much larger than the cash trade. Okay, it's a whole lot more, not a little bit more, it's a whole lot more. And so what ends up happening is you have to really make a lot more money to be able to come out profitable at the end. Okay. Now what I'm doing is you can set a target for 0.5%, 0.5%, or 1%. Now I tried the 0.5%, and there's a good possibility that you can get it sold off pretty quick, 0.5%. Okay. 1%, it may get sold off on the same day if you find the good entries. If you find a really good entry, the better you get at it, you can get it sold on the same day at 1%. But 5% is pretty good. If you find a good trending stock, you can get it quite often. 0.5%, okay, 0.5%. Now, the only thing is, when you take the 0.5%, your profits may be less. That means when you take the trade, there will be a cost of maybe 10 to 15% you'll end up dishing out. All right. Now, that if you make more, okay, because there's an initial cost, and at purchase, they will show you. You will see the cost of the trade. All right. So if you can make a higher percentage, then you will go further and be able to make more of a profit. Hope that makes sense and I didn't mix it up for you. All right, so you can make the 0.5%. You can try that for a month and see how that's working out for you, and then maybe gradually increase it to 1%. I did the 0.5 for a month, and it worked out. And then now this month I've been doing the 1%. And in the group I showed you the profits that I'm already making from the first day of June onwards. All right. So here's the entry and target. So I'm selecting the long term. But you can select the intraday, but then the risk is even much greater. And I'm giving you an explanation of what these two mean. The long term means it's just using your cash and you're not borrowing. Intraday means when you select the intraday, you are leveraging. That means you are borrowing from the broker, which means that if you make a profit, you can make much more profits, but if you make a loss, your loss is even greater. All right. So I'm selecting the long term, but I may sell off on the same day, which is really what I would love to do, because if I sell on the same day, that entire amount is available to me to trade once more. Okay, if it sells on the next day or beyond that, then after it sells, I can only use 80%. And then number 5, track your progress. Create a simple list or a chart. I use the ticker, meaning the ticker symbol, like PFC, ITC, IOB, things like that. So I write that, and the quantity, how many shares I purchased, the entry price, the exit price, and then, of course, the P&L, basically the profit that I made or the loss that I made. Okay, so the next key is to be diligent in tracking your progress. Be very diligent and don't miss out on that. And then finally, as you calculate your total profits, remember that you'll pay up to 20% taxes and fees, sometimes 10, 15% like that. Might even go up to 20%. All right, I hope this benefits you. And let me give you a quick outline, 5 steps to trading for an income. Number 1, set up your watch list. Number 2, set up for day trading. Number 3, look for high probability entries. Number 4, your entry and target, how to identify your entry and target. Then number 5, track your progress. I hope this benefits you, and I hope you've learned from this, and I wish you great profits with this. And make sure to like, subscribe to the channel, and if you have doubts, questions, please place it in the comments below, and I will get back to you. All right, thank you. Have a great day. God bless you.